Hello friends, welcome to the session on insurance marketing. Today, in this session, we will be learning the insurance marketing with reference to the promotion mix. Friends, let us start the session with the introduction of marketing. Today, Indian economy and various industry sectors are growing at speed. Each sector is having tough competition through the competitors. In this competitive world, companies have realized that it is not enough to merely develop good products, but there is a need to market products effectively. The role of marketing and its techniques plays an important role in this area. New techniques of marketing focuses on pricing the products attractively to suit the target customers. It also emphasizes on making them available to reach the target market. In addition to this, companies should also strive to build relationship with present and potential stakeholders, employees and the general public through proper communication. Every company plays the role of communicator and promoter. In marketing, there are 5 major modes of communication in the marketing communications. It is called as mix and which is known as advertising, sales promotion, public relations and publicity, personal selling and direct marketing. Marketing communication functions within a marketing framework. It is traditionally known as the promotional element of the 4 P's of marketing, that is product, place, price and promotion. The primary goal of marketing communication is to reach a defined audience to affect its behavior by informing, persuading and reminding. Marketing communication acquires new customers for brands by building awareness and encouraging the various trials. Marketing communication also maintains a brand's current customer base by reinforcing their purchase behavior by providing additional information about the brand's benefit. A secondary goal of marketing communication is building and reinforcing relationships with customers, prospects, distributors, retailers and other important stakeholders. Successful marketing communication relies on a combination of options called as promotional mix. These options include advertising, sales promotion, public relations, direct marketing and personal selling. In today's context, internet technology has also become a powerful tool for reaching the audiences. The role of each element in a marketing communication program on whether company employs push or pull strategy is very important. Pull strategy depends on consumer demand than the personal selling for the product. This demand is generated by advertising, public relations and sales promotion is known as pull strategy. Push strategy on the other hand emphasizes personal selling to push the product through these channels. So friends, now let us understand how this promotional mix is used in insurance companies. The elements of the promotional mix bring together the various promotional tools used by an organization in a coordinated way. These promotional tools are, the first one which we are going to discuss is advertising. Advertising is used to create awareness and transmit information in order to gain a response from the target market. There are 4 characteristics of advertising. Advertise is persuasive in nature. It is non-personal. It is paid for by an identified sponsor. It is disseminated through the mass channels of communication like TV, social media, print media, etc. Advertising is used to promote the adoption of goods and services. It is a sales message and is disseminated through the mass media. It helps in reaching large number of consumers. The advertising effects are measured in terms of increasing awareness and changing attitudes and opinions. It is to be noted that advertising doesn't help for creating sales. The reason is advertising's contribution to the sales is difficult as there are many factors that influences sales. Use of symbols and images in advertising helps to differentiate products and services from the competitors. Advertising also helps to create and maintain the brand. Brand helps organization for differentiation, consumer attachment to the company or trademark. These efforts helps to greater sales volume and getting higher margin. Thus, the company gets the competitive advantage. Brand equity is also established and maintained through the advertising that focuses on image, product attributes, services, or other features of the company and its products or services. Advertising is a paid publicity and communicated through a wide variety of media. Media decisions like space and time for advertising are based on the target audience. The advantages of advertising are its reach and is also cost effective. Let us understand forms of advertising. Let us talk about the first one, that is print media. This is commonly used by all insurance industry. For example, LIC gives an advertisement in the newspaper and magazines around the year to continue its brand image and also when the new products are introduced. The print media is very costly and the duration is limited, but reach is high to reach to the customer. Next one is social media. Insurance companies are also advertising their services on the websites, YouTube, Twitter, Facebook, etc. All companies, I am talking about life insurance and general insurance companies, they also have their own website. On these websites, the detailed information about the products, prices, various schemes, online transactions which includes buying, making claims are given for the new as well as old customer. A very popular website is known as policybazaar.com, which gives the complete information of various products for life and non-life insurance. Next one is television. Many companies are advertising their products on television to create awareness of their products and services. The next one is radio. Insurance companies are using radio as an effective tool to create the awareness about their products on various radio channels. Next one is hoardings. One of the popular techniques used by the insurance companies are hoarding. Many companies identify these locations where there is a flow of people, especially outside the railway station, signals at crossroads or at the backside of the bus to target the huge number of people or customer. With this help is nothing but the reach to the masses and the cost effectiveness as the display of the hoarding is for a long period. Next one is brochures and pamphlets. Insurance companies print brochures and pamphlets with the detailed information to provide the customer so that they can have a look on various schemes and their prices. These are used at offices, banks or used as insertions in the newspaper. And the last one is public relation. Publicity is a non-paid form of communication. Generally, it takes the form of news reports and announcements. Organizations try to maintain good public relations through the use and application of PR tools. These tools include publicity through the media, event sponsorship, special publications, brochures and other publicity material. Publicity efforts helps to enhance the credibility of the company and its products and the services. The editorial features are perceived by the buyers as more genuine and impartial. A typical public relation program includes publications like press releases, annual reports, brochures, posters, articles, press conferences, seminars, media stories about new customer and product and service development, exhibitions, displays, sponsorship of charitable causes, arts or sports events. The disadvantage of publicity is that the marketer has no control over the message or the content or time. Public relations are helpful for the companies to build their brand image, to maintain good relationship with customers, to make the people aware about what is happening recently in the companies. Medium of public relations are press releases. This helps the company to convey its message to its customer and other people. Companies write articles or held press conferences to create awareness about products, how to invest in insurance, etc. The next one is sponsoring events. To create the brand of company, many companies they sponsor or organize various events, for example, cricket series, music concerts, etc. The next one is personal selling. This is a paid form of personal communication with the target customers. Personal selling facilitates face-to-face contact with the target customers. Flexibility is a silent feature of personal selling. Personal selling is suitable for communicating information about expensive and premium services. An advantage of this type of communication is that it can be aimed at specific target market and prospects. Personal selling can also provide more direct feedback than other methods of communication. However, personal selling has its own disadvantages. High cost per contact, high investment cost for training the sales force, high pressure sales techniques. Insurance companies hire agents for personal selling. This is the most widely used method of promotion by all insurance companies. They recruit, train and motivate the insurance agents to convince the customers to buy the insurance policies of that particular company. The agent also collects the monthly premium and settles the claim for the customers. The next one is word of mouth. Word of mouth promotion plays the role of hidden sales force. The word of mouth promotion is normally carried out by customers, agents and employees. It can be positive or negative depending upon the service or experience they receive. Customers. It is important for the organization to provide customers with high quality service so that he is satisfied and spread the good word of mouth. On the contrary, if the customer is not satisfied with the service or the experience which he receives at the company, in that case he spreads the bad word of mouth. Next strategy or a promotional mix is sales promotion. This promotional tool consists of all the activities that help to stimulate the purchase of goods and services. These activities are aimed at the end user or the channel members. The sales promotion involves the use of free samples, money off coupons and special offers, competitions and free gifts and other incentives to stimulate the sales. Sales promotion is used by marketers to stimulate the trial of new products and maintain interest in the established brands. So, sales promotion should be regarded as a tactical method for stimulating sales over a period. Let us understand what are the various factors those affect the composition of promotional mix. Even though a promotion mix consists of 4 elements, a marketer may not use all of them while promoting his product or service. Firms that have multiple product lines use different promotion mixes for each product or line. The factors that affect the composition of the promotion mix include promotional objectives and policies, promotional budget, target market characteristics, product characteristics, cost and availability of promotional methods. Let us understand one by one. Promotional objectives and policies. Promotional mix in an organization is based on its promotional objectives. The objective of promotion is to motivate the customer to take action, which includes like buying, work for social cause, act safely, respect to the tourist, stop smoking or develop the patriotism. In case of insurance companies, promotional mix involves giving the information about the product, why to buy the product, benefits like tax saving, coverage of the risks, etc. So, all this help to attract the customer. It is important for insurer to understand and identify the priority of objective of the customer. In this process, the response process is been studied by the marketing people and they have identified that how to study the customer and they developed a model called as AIDA. This model helps to understand that how the customer goes through before taking action, which we are talking about like buying the product. So, according to the AIDA model, a customer's response process goes through the 4 successive stages, that is attention, which is depicting A, interest I, desire D and action A. So, AIDA. It helps to develop organizations' promotional mix on the basis of its promotional objectives. For example, if a company's promotional objective is to make customer aware of its new product, its promotion mix is likely to be heavily oriented toward advertising, sales promotion, and to some extent publicity. Suppose the promotional objective is to persuade the target market to purchase an organization's pension policy schemes. In this case, selling is perfectly suitable here to promote the policies. Advertising and publicity can also play a crucial role in portraying a specific image of the product. Before determining the composition of a promotional mix, a company's marketing department take the decision whether to use a push or a pull strategy. In push strategy, the producer promotes the product not only to the next member down in the marketing channel. In the consumer marketing channel, which is comprised of producer, wholesaler, retailer and consumer, the producer promotes its products to the wholesaler, who is just below the producer in the channel. Each member in the channel again promotes the products through the marketing channel. Marketers who employ a push strategy generally use personal selling to market the product. They also use advertising and sales promotion in conjunction with the personal selling to push the products down through the channel. In insurance, there is only one level in the channel, that is agents, brokers, advisors. So, insurers promote their products to agents, brokers, advisors, and they push it down to the customers. The next one, in promotional mix, one of the important factor is promotional budget. The selection of the promotional tool is depend or influenced by the promotional budget of the company. If the budget is less, in that case, company depends on personal selling. This has an advantage that it can be measured with the performance of the salesman or executive, wherein it is difficult to assess the contribution of the advertising or publicity. The promotional budget of the company depends on the revenue, percentage of sales, availability of funds, competition in the market, etc. The next factor is very important, that is target market characteristics. The characteristics of an organization's target market defines its size, geographic distribution and demographics. This helps marketing manager to determine the composition of the promotion mix. For example, personal selling is an efficient way of communication when the organization's target market is quite small in the rural area. If the target market consists of millions of consumers at national level, in that case, use of television advertising is effective. Promotion methods enable the organization to reach a large number of people at low cost per person. Marketing team in company or marketing agencies which are hired by organizations, they select the promotional technique on the basis of demographic characteristics such as age, income, social class, occupation and education. In case of the old age group, to promote the products, the personal selling is more effective, wherein the lower and middle income class family sales promotion such as contest, discounts, coupons and refunds are the tools to attract them. The next factor is product characteristics. Product characteristics also helps marketers to take a decision about the composition of the promotion mix. Personal selling is effective for promoting industrial products, whereas advertising is effective for promoting consumer goods. In case of service organizations, including insurance companies, advertising and personal selling are the most suitable methods for promoting their product. Salespeople play an important role in personal selling because they provide services to the customer. To promote the insurance policies, percentage of the premium, gift vouchers, calendars, diaries, CDs of the product, presentations are used by insurance organizations. Insurance companies use more personal selling efforts and advertising because consumers perceive greater financial risk in the purchase of insurance policies. Personal selling is happening or salesman comes or agent comes, it becomes very effective as a customer of the insurance sector needs more information from knowledgeable advisor. When the new product in the insurance sector is introduced, considerable advertising is required to make potential consumers aware of the new product and encourage them to buy it. For example, many leading companies, insurance companies, are using extensive advertising to make consumers aware of its newly introduced insurance products. Personal selling plays a vital role in reaching consumers during the introductory stage of a life insurance product. Advertising is important for insurance products which are in the stage of growth and maturity. If an insurance product enters the decline stage, the company has to focus on reducing the number and variety of product choices offered by them. The nature of the product also affects the composition of the promotional mix. For example, since an insurance product is generally intangible in nature, it requires advertising to explain the benefits of the product and also the services given by the agents. Agent role is very important in insurance sector because he is the one who can help a customer to understand the benefits of the various insurance policies and help him to choose or select the policy. The next one is media choice and selection. Marketing managers select the most suitable media for advertising from different types of media. The selection factors are used such as available budget, characteristics of the target audience, level of coverage required, exposure and frequency, cost effectiveness and the desired impact. In case of the selection of the communication media, the cost effectiveness of each type of media is considered. The success of advertisement campaign depends on the selection of the right combination of media because each medium has distinct advantages and disadvantages. Example, electronic and print. Now, how to manage the promotional efforts? The management of promotion is concerned with the task of coordinating and implementing the promotional program. It also integrates the promotional programs with the organizational goals. There are 3 stages in promotional management. Stage 1, developing the promotional mix. Stage 2, allocating the promotional budget. Stage 3, monitoring and evaluation. All the components of the promotional mix must be combined to create a comprehensive promotional program. A well-designed promotional mix includes detailed costing information of each proposed part of the promotional plan to ensure that plans are within the budget and that budget is allocated for maximum effectiveness. The factors which influence the design of the promotion mix are nature of the organization, service offerings, service life cycle stage, customer characteristics, consumer behavior and decision processes, distribution channels. An integrated marketing program clearly defines the promotional objectives can also facilitate an effective promotional program. Now, let us talk about monitoring and evaluation. Monitoring and evaluation is the final stage in promotional management. The controlling is built in the plan at the start, which helps to measure the effectiveness of the activities. The purpose of this stage is to determine the issues like whether the objective of promotion being met or not, whether the target audience received the message or not, whether the plan is with the budget or not. Methods like marketing research, direct response and point of sale monitoring are helpful for evaluating the communication management process. The focus of evaluation method are designed and based on promotional objectives. The monitoring and evaluation process provides information that help marketing managers to make better decisions about the promotion of products and services. So friends, let us summarize what we have learnt in this session. Communication plays a vital role in today's business. It can be viewed as an interactive dialogue between the company and its customers, which takes place during the pre-selling, selling, consuming and post-consuming stage. Companies use 5 techniques for promoting their products: advertising, sales promotion, public relations, personal selling and direct marketing. The factors that affect the composition of the promotion mix include promotional objectives and policies, the organization's promotion budget, the characteristics of the target market and the characteristics of the product. And last but not the least, cost and availability of the promotional methods. The factors that influence the design of the promotional mix are nature of organization, service offering, service life cycle stage, customer characteristics, consumer behavior and decision processes, and distribution channels. The last stage in the promotional effort is to monitor and evaluate the communication decisions making. So friends, I am sure that you have a takeaways from this particular session on insurance, especially promotional mix strategies. Thank you so much.